back. Another video where I talk about this. In this video, once again, I'm going to talk about Bitcoin and the crypto markets. And it is Thursday, the 23rd of October, 2025. And what's happening? Well, let's go over it. Bitcoin and alts have been basically, on the big picture, kind of chilling, taking it easy since that minor little drop that happened. A very fast dump and pump that happened about, a couple weeks ago tomorrow. And it is no surprise that they're doing what they're doing. People who were looking for, big month in October. Hey, listen, you still might have a big month in October to the upside, but there's been a very nice big month to the downside and back to the upside. If you were shorting before that dump, took profits at the bottom, and then bought at the bottom and took profits when it hit the top side. On the lower time frames, you can see that the VEPs have been, as always, on the high time frames and the low time frames. You can see the VEPs have been indicating very clearly what to do, where to enter, where to hold, where to take profit. And that is precisely why we do that and why we trade the VEPs at Alpha Trading, right? Because that is how the markets are run. That's the maths that run the markets are the VEPs, right? That's why the high frequency trading firms use volatilities, probabilities, statistics, and the more advanced ones also use entropy, as we do. Why? Well, because that's what the HFT firms that run the markets use. Again, so it should not surprise anybody that the markets are doing what they're doing if they know how to read the VEPs, right? When you're reading all these silly news stories that say, it was, this news story about politics or some economic advisor or some analyst said this or some Fed policy or whatever it might be. That's all noise. That is all distraction to keep you from being focused on what actually matters when you're trading low time frames, right? When you're trading low time frames, none of those things matter, okay? Now, you might tell me, well, in the heat of the moment or in the moment when the Fed makes an announcement, you can see the market moves. When the market moves one way or the other, when the Fed makes an announcement or when any significant institution or authority makes any kind of announcement, they're not moving the markets, right? They're making an announcement. The market is doing what the market is set to do based on buy pressure and sell pressure, right? Whether there is buy pressure or sell pressure will determine, like more buy pressure or more sell pressure will determine whether or not the volatility, will drive the prices up or down. How does that happen? Well, what is the buy pressure and the sell pressure a reflection of? Right? It's a reflection of the ask and bid spread. The ask and the bid spread, or the spread of data around the mean of returns, is literally another word for volatility, right? It's called variance. Volatility, what is volatility? It's the standard deviation of returns. It's not the standard deviation of price. It's not how much price moves up or down. It's the standard deviation of returns, and specifically the standard deviation of log returns on investments. That is what volatility is when it comes to trading. It has nothing to do with price, right? In the sense of price is not what sets volatility. Volatility is set by the returns, by the standard deviation of returns, specifically by the spread, right? The delta, the difference between the asset prices, right? You can say, well, I thought you had nothing to do with the price. Yeah, it's nothing to do with the price that the market is at. It has to do with the delta between the ask and the bid, between the buy and the sell prices, right? There's a difference. If you look at your exchange, wherever you're trading, you'll notice there is a difference between the latest buy offer and the latest sell offer, and they come to a happy medium, and they make their exchange, they make their trade, right? So when you enter your trade, whether you're buying or selling, you enter the price that you want to buy or sell at, and the exchange then, if you're not trading directly against the exchange, which you usually are, by the way, but if you're not trading directly against the exchange, let's say you're trading directly against another actual trader, what happens is the actual exchange, holds the contract between you and the other trader, and that's the two parties that run the deal, and that make the deal, right? So you have a counterparty to your trade, whatever trade you're running, and that happens when you open a trade, when you close a trade. So the spread of data around the mean, right, which is variance, which is volatility, the standard deviation of returns creates the returns. Okay. You can tell me, well, that seems illogical. Doesn't the return create the standard deviation of returns? No. The standard deviation of returns, the spread of data around the mean, standard deviation of returns creates the actual returns that are resulting from that standard deviation of the returns. And the returns, correlated with the data set, give you the direction of whether the price is going to go up or down, right? That's what creates the price. It's the returns. It's not the, it's the returns with the correlation that create the price. So standard deviation of returns creates the actual returns, and the actual returns with the correlation create the actual price. Now, how can you tell which direction something's going to go by the standard deviation of returns? Well, you correlate the standard deviation of returns to the data set. And then that tells you what the tendency is, or whether or not the price action is likely to go up or down on the current candle and the next one. Fun fact, the same thing can be used, but can be done with entropy. Entropy and its correlation to the data set also shows you the probable direction of the asset in terms of price to go up or down. Entropy is an extremely powerful indicator. That's why we have an entropy indicator, because you can actually predetermine or predict, if you want to call it that. You can forecast extremely accurately the direction of price based on entropy and the correlation of the data set. So what we are looking at right now on the market is that Bitcoin and entropy, Bitcoin and crypto have seen their leading indicators winding up on the higher time frames, coiling up, with a lot of the standard deviation bands getting narrower and narrower. And that is an indication that there's going to be a move, whether it's upside, downside, or sideways, because the price always goes up, down, or sideways. There's going to be a move, up or down, and it's going to be not insignificant, most probably. And it could be any time between now, and whenever. Don't put a time frame on it because it's irrelevant, especially when you're trading low time frames. But the point is, the assets are pretty much all right. Those that had that nice little dip 2 weeks ago, they've been kind of settling around where they have been now for the past couple of weeks or so. And it's not because they're settling for 2 weeks that they're set for a move. No, it's because if you look at the spread of data around the means, they're very narrow. And what that means is that there is a lot of tightness in these bands. And what happens when the bands are very tight and the volatility is very low, the correlation's high or low, depending on the asset you're looking at, is you're going to see at some point the volatility is going to make a move and or the correlation is going to make a move. When that move happens, or when you see it's about to happen, when you look on low time frames and you can see it's starting to happen, that's the time to enter trades, right? But you don't want to enter trades and stay in them for ages, right? Especially not in crypto. Because you saw, for example, what happened a couple of days ago when there was a very nice little pump on Bitcoin and other cryptos on the 4-hour time frame, right? You can see very nicely. And of course on lower time frames. But like on the 4-hour time frame, Bitcoin went up a few points, yeah? And many other cryptos also went up 3, 4, 5, 6, 8 points, depending on the coin, some of them 10 points. And when they did, I remember seeing some people saying, wow, Bitcoin's making a move, let's go. And what I said was take your profits. Sure. Why? Because Bitcoin had hit, and many other cryptos had hit key levels on the VRE. What's the VRE? It's one of our indicators that we use, the alpha trading VRE specifically. It's not the regular VRE entirely. It's a little bit different. But it hit specific key levels on the VRE. And those are great take profit areas, right? Because it was very likely, given the other information, especially with the RMLR, that we saw, okay, it's hit the upper bands on the RMLR and it's hit the key levels on the VRE, and we saw the returns were very high, right? And we saw that everything was, and the volatility, spiked up, and the correlation spiked up, and they were all maxed out. Well, what's likely to happen after that? It's likely to mean revert. Right? The asset, the returns are likely to mean revert. And what happens when you have a high price, relatively high price, and the returns are extremely high? Well, normally, what happens is the asset will mean revert. Probably, and there's a very high probability it'll happen to the downside, right? Not always. It could, in fact, mean revert further to the upside or sideways, right? But in this case, taking your profits, letting it mean revert, and even taking the trade back through the mean reversion, that was a double profitable thing, right? Because you could have taken profit on the long and then taken profit on the short, which is exactly what low time frame traders were able to do. People who just sat there in their longs and were sure this is going to keep going up. Oh, this is the breakout. This is our October breakout. Well, they were not right. They entered trades probably late, right after the move had started to break out. So if they're lucky, they got maybe half that move to the upside. Didn't take their profits. And even though I was saying, yeah, take your profits, the majority of retail traders did not. And they proceeded to dump back down. And a lot of people got wrecked. Right? Even though it didn't move down that much, it literally went back down to where it started in most cases. In some cases, it dipped even a little bit further. And in the case of Bitcoin and some alts and whatever, you saw prices dipped even further after some hours, after it hit the starting point of that little pump. And then, and it kept going further, and people got wrecked even more. Or even more people got wrecked, I should say. How do we know they got wrecked? You can see it. You can see it on liquidation indexes all over the place. They have them on CoinGlass and other places. So that's why we trade low time frames. We don't try to swing trade a volatile asset like Bitcoin or any crypto, or frankly, even traditional assets, which these days, since years already, are increasingly volatile. And markets have increasing volatility for a number of reasons. Because of buy pressure and sell pressure. Because there's, more traders logging on, trading online, having a go at it. HFT firms are running gazillions of trades every, day. And they're moving the markets with their bots. And that's precisely what's happening, right? So, when you think to yourself, oh, I'm going to enter the perfect trade, it looks like it's set to make a move and I can just stay in it for years. No, you probably can't. Like, yeah, sure, maybe one day you'll get a great trade that you can stay in for years. If you entered the trade, for example, just before January 1st, 2023, or on January 21st, 2023, you could still be in that trade and you'd be very profitable in Bitcoin, right? You'd be like up, you know, 8x or whatever. And at the high, it was like 9x or whatever, you know? That's fantastic. Like it went from 15 grand to like 126 grand. It's like a 9x or something crazy, right? But he would have been in that trade 4 years, and you could have gotten much more than 9x on your returns in those 2 years had you traded shorter term trades. Which, again, if you're an investor, who cares? You don't want to trade, that's fine. But if you are a trader, then there's no reason for you to be trading high time frames. If you're trading high time frames, you're really not a trader. You're actually just a short-term investor. If you're trading daily or weekly time frames, right? You're really just a short-term investor. Because what is a trader? A trader is somebody who actively engages with the market multiple times in a day, preferably, and is buying and selling all day long. Because you're making money from little amounts of profit in your trades overall that at the end of the day stack up to a nice little amount, or a nice not little amount, depending on the size of your stack. So that's why it's important for you to trade the low time frames, right? And to look at the low time frame information to get comfortable trading 15-minute time frames and less, right? Frankly, a lot less, in my opinion, but 15 minutes is perfectly fine. It's a very good time frame as an intraday monitor, and it's also a good time frame you can trade on. But you definitely need to look at the lower time frames, 9 minutes, 6 minutes, 3 minutes, 1 minute, just to look at them. Even if you don't actually enter or exit on those time frames, because maybe it moves too fast for your brain to calculate, or for your brain to be accustomed to knowing what to do. But the more you practice, the better you get at it. Anyway, that's going to do it for now. I wish you all the best. Remember, we do live streams Monday through Friday, starting at 9 a.m. U.S. Eastern Time. We usually run about an hour. So we start the live stream a little bit before the traditional market opens, and then we run, about a half hour before market opens until about a half hour after market is open. That way you get to see what's about to happen likely on traditional markets and what is beginning to happen at the beginning of the trading day. And you also get to see a nice analysis of the leading cryptos and the major movers on the market on any given day. So feel free to join us. The link is alphatradinghq.com/Discord. Free to join the Discord, free to enter the live streams. All you got to do is make sure when you enter the Discord that you click the little green check mark in the rules channel. When you come into the Discord, you'll see a welcome message. Read that welcome message. Make sure you click on the green check mark in the rules. Once you do that, you get your role that allows you to go and request a ticket to get your free volatility starter pack of indicators and a free chart that comes with all the indicators on them. And then it's all on TradingView, so you got to have a TradingView account. You can even have a free account or whatever, but I highly recommend getting yourself at least a minimum paid account there, because if you're going to be a serious trader, you got to have a professional set of tools. Just like if you're a professional plumber, you're going to have you're not going to show up with your play school plumbing tools. You're going to show up with professional tools. So get at least the minimum set of tools you need, which is from TradingView. You'll get the indicators free from us. I think, by the way, TradingView either has, I'm not sure, I think they have their cyber sale on, or whatever, their Black Friday thing. It might not be on yet. Maybe it is. I don't know. You can check it out. I think when they do have it, it's like 60% off or some crazy amount. It's a really good deal. So you can wait for that or whatever. But in the meantime, you can get the free account on TradingView. And we have a way for you to use our tools even with the free account. There is no problem. The point is, you can learn for free how to use our tools, be comfortable learning how to trade volatility, probabilities, and statistics. Once you're comfortable using the free tools and you see that the tools work, and you see they work consistently and that you're reliably and consistently profitable in your trades, if you just, like in virtual trades, practice trades, no money, then you can go ahead and decide for yourself if you want to use our Pro Tools. I mean, they're all Pro Tools, but we call the rest of our indicators the Pro Tools package, the Pro Traders package, which is even more advanced tools than the ones we give away for free. Although the ones we give away for free are very powerful, and many people in our Discord use those tools and nothing but those tools to trade, and they're extremely profitable every year. But it's really meant to give you, like, given the amount of tools that we have, it's meant to give you a taste of what the rest of our tools can do. The rest of our tools are way more powerful. And I see your messages, but I can't see your message. I saw somebody sent the message, so hello there if you sent the message. Our Pro Tools are far more advanced than our basic tools that we give away for free. But like I said, our basic tools are actually very powerful, and those are the tools we used when we started off of trading. So we know they're extremely reliable because we literally used that's all we had. So that's what we used, and it's extremely powerful. But we made even more powerful tools, and those are the ones that we make available for a very, very small fee, mostly to keep the grifters out, most of like the freeloaders, and who don't really want to, like, they just want to get free tools and never learn anything, and then they just spam and troll and be annoying. Um, so we have a very small, and also to reward the coders and developers, who actually built the tools, like the co-founders among us who built the actual tools. They get a little bit of a reward. It's nice. It's good for the community, that keeps supporting the development of the tools. And that's it. So come on in. It's, again, Monday through Friday, 9 a.m. is when we start. You'll see us analyze the markets, analyze the Bitcoin and other top cryptos, other assets, and you'll learn how to trade the VEPs all for free. Anyway, so that's gonna do for now. I'll talk with you guys later. Happy trading. Peace.